Good morning, good afternoon, good evening. Welcome to, what day is it? I'll start again. I've got all a bit confused because it's a Tuesday and not Monday or Wednesday. It is Tuesday, the 9th of September all day. You join me with Cam from Institutional 5 for the Crypto Blast. Yes, it's normally on a Monday or a Wednesday, but we've moved this one to a Tuesday. Cam didn't want to leave you waiting until an extra 24 hours because he's got some big news to talk to you about. But before he does, I'll get the legals out of the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, Institutional Fi, myself, Ryan Pacey, or indeed Cam. Cam, hello. It's weird speaking to you like this on a Tuesday.
It's very strange. I'm not gonna lie. I was thinking earlier today. I was like, today's gonna be this week's gonna be really long. I can't believe it's Monday. Oh, wait a minute.
But the thing is, well, it threw me because it's also at a different time. So like my brain kind of had a bit of a, kind of reset period.
I know lots of news and headlines have come up today. Everything I prepared for yesterday has pretty much gone out the window. But here we go.
God. Well, crack on.
Yeah, exactly. I'm excited because there's a lot to talk about. There's some really impactful news in terms of cyber attacks, and that affected absolutely pretty much every single chain out there that was going. We'll get into that. There's been loads of developments over in the US with proposed legislation, even 24/7 markets, which I'm actually looking forward to see if we can get your take on things. I'm not going to get into all the wars because that's very much outside of the realms of.
I can give you my take on 24-hour markets for traditional markets right now.
It's a 4-letter word.
But no, I'll tell you what. I'll wait until I'm called up. But yeah, I've got some takes on traditional markets being 24 hours.
I'm looking forward to it, and hopefully our listeners will be looking forward to it as well. Right, so let's crack on. BTC, we're about an hours into the US trading session at the moment. BTC is coming in at literally $112,000 as we speak, down slightly as soon as the markets open, but there is also lots of chatter around a potential war that could be cracking out in the Middle East. So no doubt that might have some sort of effect on the markets at the moment. The range high to low we mentioned last week, it was 112 to around 107.1. It's been fairly resilient. BTC, has been trading outside of this range today, but we're yet to see a daily close higher and out of this range. So for now, I'm going to stick with that. It's quite a strong resistance and support lines. In terms of price action that happened over the weekend, it was relatively muted. In fact, from Friday's close of play to Monday's open in the US, there was only a 0.7% move higher, and Ethereum very much something similar. Today marks the 78th day of consecutive days trading above $100,000 again. So we mentioned this quite a lot. BTC's, people could say, it's starting to turn bearish. It's spent over 78 days trading above $100,000 in consecutively, which is just incredible. This in turn moves up all those moving averages. Specifically, the 200-day moving average is crept up to just shy of $101,000, just behind the year-to-date average of 101,280. And if you take a look on chain, you can actually have a look at the buy limit order book, and there is so much volume stacking on above $100,000 per Bitcoin. So if you're a Bitcoin bull, in theory, this should provide you with some strong confidence for sustained support, at least in the short term. If we look across to Ethereum, ETH is currently trading at $4,292, pretty much flat from close of play on Friday. ETH briefly dipped around 1.5% over the weekend, and it recovered, made a move slightly higher, but we're back down to where we were Friday. Not too much is in the pipeline this week for Ethereum. We did see some public comments from the founders saying that Ethereum is about to complete its first steps in its short-term roadmap, so that could potentially be bullish, all in line to essentially lower those gas fees, even more so than where they are at the moment. From September 2nd to September 5th, which was last week's trading for the ETFs, Ethereum spot ETFs saw a weekly net outflow of $788 million, which is the largest on record. No single ETF recorded a net inflow on the ETH side. In contrast, though, we have the Bitcoin spot ETFs, which posted a weekly net inflow of $246 million, marking 2 consecutive weeks of net inflow. And if we take a look actually over to yesterday, I'm very sure that I saw something very, very similar, mimicking this essentially transition away from Ethereum back into Bitcoin, on the ETF side of things. I'm just pulling up the data in front of me. I've got about 12 tabs opened, all pretty
Do
much
you want
around
me
the
to
same
tell some
thing. So
jokes whilst we wait?
yeah, go on.
Actually, I better not. I better not. Actually, no, because I've got compliance on my
Take it
case
back.
already for swearing too much.
So we'll skip the jokes then. Yesterday, Bitcoin saw over $364 million in net inflows, and Ethereum saw $96 million outflows. So that same pattern that we saw build up over the last 2 weeks of actually negative Ethereum flows versus the trend of what's been happening over the last couple of months, and positive Bitcoin flows does seem to indicate there is some sort of slowdown in purchasing of ETH. We're seeing less news about drops, these DAC companies raising money to purchase Ethereum, more so on the Bitcoin side. I believe this month, August alone saw $16 billion raised just to purchase Bitcoin. So yeah, we're starting to see that flip a little bit. We'll pay attention to that as it develops through the week. So if we jump back over to looking down the altcoin sector, XRP coming in at $3, BNB at $881, and Solana, it trades at $218. Notably, out of the altcoins, will drop down slightly lower than that top 5, top 6. We'll move over to Hype, which is the exchange token for the decentralized exchange Hyperliquid. Their tokens trading at $54.50, up 23% on the week ahead of its stablecoin launch, USDH. Now, a stablecoin launch, if they're launching a stablecoin, why would that in turn raise the exchange tokens price? Well, they're essentially trying to internalize missed revenue of around $220 million, which Circle currently earns, because the USDC stablecoin, which is used on the Hyperliquid's exchange, has around $220 million in revenue that they earn, because the volume is around $5 billion worth of USDC, which is currently sat on the exchange. So with T-bills just getting like a 4%, annual yearly income, it's difficult for Hyperliquid to go, oh yeah, we're okay with just missing out on $220 million that we could just
Well, this
passively
is it,
be
right?
earning in the background.
Yeah, this is it. This, to really dumb it down. It's sloppy not to try and take that, to gain that, right?
Yeah.
That's all it comes down to. Yeah. I think there's so much money being made in crypto and all these things, weird and wonderful things happening, that it's very easy for a lot of these firms to literally just go, oh, do you know what, we can't bother to deal with that. But like you said, break it down. That's a shit ton of money. So for
Yeah.
a company to be really kind of, be very honest and say, look, the reason we're doing this is because that's a lot of money to leave on the table. We want to be effective. We want to be efficient for our shareholders. Why would we leave that money on the table? And I think, that's to be commended. And it sounds obvious. It sounds an obvious thing to say, and everyone's going to be looking at this going, well, right, surely that's a given. But you'll be surprised how many crypto companies out there are letting this kind of level of money, and probably out there, there's probably cases out there with more than this, where they're letting it slip through their fingers just because they're just being lazy or sloppy.
Yeah, no, absolutely. And when I say this next sentence, which if they can actually, gain this market share back, in-house, it will be their highest earner within the year. So there's a lot of money which they're currently not taking in.
Sorry,
On a
just on that,
con side.
all
Go on.
these things sound. It's very easy to ignore this type of money when you're doing incredibly well and you're printing untold riches. But when your other sources start drying up and you realise you've left all this on the table, that's when it shows. It's like that whole like that very old cliche. It's like when the tide goes out, you realise who's swimming naked, kind of thing.
Mm,
And again, I think companies that are doing this proactively, I think need to be applauded.
no, absolutely. On a con side, for Circle, and this kind of moves through to Coinbase as well, because Coinbase own, I think it's something like a 50% stake in Circle. This market share it's over $5 billion, so it represents around 6% of Circle's current market cap. So that would be a significant knock on their current revenue that they earn. So it could have a negative impact on Circle's stock price as well as Coinbase. So if we just have a little move on to cover some news coming out of the US, got a few different regulatory news stories that's coming out from there. So the first of which is that this morning we saw that 12 Senate Democrats unveiled a detailed framework for market structure and legislation this morning, signaling the minority party's readiness to work across the aisle on comprehensive crypto reform. So I've just had a look through this market legislation that they're proposing. And I'll read out the highlights because a lot of it is a very, very simple document. It was about 6 pages long, but a lot of it's just more of the same. The highlights were they want to close the gap in spot markets for non-security and digital assets. How do they want to do this? Well, they want to grant the CFTC exclusive jurisdiction over markets for digital assets that are not considered securities. So just the digital commodity side of things. And they want to provide CFTC registration, regulation and enforcement tools over platforms involved in digital commodity markets. Then they want to clarify the legal status of digital assets and regulated jurisdictions, require regulators to issue guidance about how key long-standing securities laws proceeds apply to digital asset transactions, which could include safe harbors to identify transactions that are not involved in securities trading. Now, further down, there's just pretty much more of the same of this. The bit that really captures my eye is that they really want to prevent corruption and abuse. Well, how do they want to do that? They want to limit elected officials and their families from issuing, endorsing or profiting from digital assets while in office. I wonder who that's aimed at. We don't have to wonder. They say it. President Trump has turned to digital assets.
Yeah. God, you know what? That was an impeccable delivery. I've got to say 10 out of 10 for delivery, because I was about to say, well, obviously the answer is Donald Trump, but obviously they're not going to say that. You're like, no, actually, they've named him.
Yeah, no, they did. Yeah. President Trump has turned to digital asset projects to enrich himself and his family, abusing his office for corruption with no modern precedent.
I mean, you can't argue with them, to be honest.
Try and make your case. That's what I'm doing. I won't say anything more.
I'm not saying I wouldn't do it if I was in power. Of course I would. But yeah, he's banged to rights, so you can't argue with any of that.
I'll tell you what, with some more stories that we've got coming out, I'm not sure he's got much of a defense on this one, but we'll see what they say. The fact that this is probably it's number 6 and number 7 in their points right at the last back end of the pages. So I wonder what the response will be to this in the House. So if we move away from this document, so according to Eleanor Terrett, the update Senate Banking Committee market structure bill includes the following changes. So we're seeing changes to staking, airdrops, pre-enactment tokens are excluded from securities classifications unless they're deemed fraudulent. Decentralized physical infrastructure networks, we call them DPINs, are exempt from security laws. Self-custody and developer protections are retained, and a formal SEC CFTC coordination framework will be established soon. So some really positive side of things with clarification on what is a security and what isn't a security for digital assets. As well, we saw the US SEC chair and the CFTC chair have jointly proposed, and this is where I want to get your take on, proposed a 24/7 markets policy to bring securities trading online around the clock,
get comfy.
aligning with crypto and global markets. Yeah,
right,
so go on.
So, yeah, I get that this is where it's got to go. I get that, why is it closed for, half the day kind of thing? After 24 hours. I understand all that. Obviously, if hours have been extended with the likes of Globex and electronic trading. I'm glad my good friend Dunny is listening live, because he's old school trader as well. He knows when markets used to close and finish. With my traditional hat on, obviously my background being real trading on real markets. I say real as in non-crypto. I don't like to mention it, oil and gas. But anyway, I think from a trader standpoint, I think this is awful, because technically they're only closed for an hour. Like US markets are only closed really for an hour anyway. that Globex settlement period. It is good to have that settlement period. It means, stuff that if there are missed settlement processes and stuff, you've got this time to clear it. When you come to options settlements, etc., the options, they have their period to be exercised, etc. I don't see the need to be going 24 hours a day. I think what you'll have as well, if it does go 24 hours a day, moments of illiquid periods, such as weekends, such as late nights, middle of the night UK or East Coast time. Like it or not, that's when most of the liquidity happens, is during London and New York time. We are the epicenter of finance for both cities. I just do feel like it adds a lot more needless volatility and risks to the market, that things could go squiffy overnight. And there's a lot of money at stake, right? Like it or not, but there's a lot of, huge positions, real money positions, say pensions, etc., that, they can't risk overnight and like 2 o'clock in the morning, all of a sudden the gilts or something like that go, a gazillion points offside because there's no liquidity and market makers in there. It sounds great on paper to make things 24 hours, but I'm telling you from someone that's been sat at the coal face, it is far more difficult when you're talking about traditional markets with so much dependent on the liquidity, the depth of market, and the nature of these markets. I think it's a lot harder to do. Yeah, fine. Wheel it out in single stock names to begin with. Potentially not such a big deal. But I think we've got to be very careful on the scope of this. And that's my little rant. And I've just that's all off the top of my head. So apologies if that was a bit rambling.
No, what do you think the impact or potential impact of not reducing settlement times could be in a 24/7
Well,
market structure?
settlement time. So in terms of settlement time, so it still it takes seconds for the settlement to be processed, right? So crude price, take for instance my background. The settlement period is the weighted average for the last 3 minutes of the official trading session, which London time is 7:27 to 7:30 p.m. Straight within minutes, you get the settlement process. So that's when when I say settlement, I mean the settlement price. So this is all
Hmm.
automated anyway. So it's not necessarily that being the issue. It's just about, this is going to sound very kind of boomerish, but it's just a case of the people making these decisions and the people booking these trades and doing all this. You do need that moment to, to step back almost. Again, maybe I'm just being old hat. I can almost feel Dunny nodding at me via the internet. And I'm sure he's about to WhatsApp me and say I'm bang on. Yeah, like I said, I agree the scope that a lot of stuff could be 24 hours. Crypto is 24 hours. Maybe single stock names, they could be single stock hours. But I do think it opens up a lot of risk if we rush this through. And I do believe there's some markets, such as maybe rates markets, etc., that shouldn't be tradable over the weekend because no banks are open. Like the bank desks aren't open over the weekend. These are the guys at the counterparties. And you need to remember the counterparties need to be there in order to make an effective market.
Mm.
And again,
Some really
this is
interesting points.
this is all off the top of my head, so I might be talking bollocks. And Danny's just texted me saying, "Am I watching him?" So he obviously is nodding. So I'm pleased about that.
That's brilliant. As long as he's nodding and not nodding off, there we go. That's
Wow. Oh, go fuck yourself.
compliance. No, no.
Right, move on. Move on.
Move on. So those are some really good points, Ryan. I very, very much appreciated hearing your insights, because
Thank
we're
you.
yet to have a personal chat about that. So, yeah, brilliant.
You know where to
I'm sure
find me.
more. That's it. Yeah. Oh, I can't get there because of the blooming tree in front.
Oh
So
yeah, the
anyway,
excuse. Right, move on. Move on. Move on.
moving on. Right. So yesterday and today, but it seems to like it's mainly been solved. There was a massive supply chain attack that hit yesterday regarding JavaScript ecosystems. 18 core NPM packages were hijacked, and these libraries contained over 2 billion weekly downloads. Just going to run through a thread essentially as to what happened and what was affected. So on September 8th, which was yesterday, if you're listening live or listening today, the NPM account of a developer Quix was hacked through a phishing email. Yes, through a phishing email. The attackers published malicious updates to 18 widely spread packages, including Chalk, Strip Anti, Color Covert, Debug, and a few other different packages. The phishing domain was registered just about 3 days before the attack. So again, had a little bit of care, gone into researching a little bit of email, he would probably have been able to find out that this was a phishing email pretty quickly. But again, it's probably just a reminder how susceptible any of us are to these simple links and that happen in emails. If something is such as simple as an email or a text message or a private message, there's some devastating effects that it can have. So once they got access, they moved really quickly. Malicious versions were live within just a couple of hours, and they sit deep within inside most web applications, which is why the impact was so dangerous. The malware is a crypto clipper built to steal funds. It works in two key ways. Passive address swap, so silently replaces wallet address inside dApps, and an active hijack, so it intercepts the live transaction before signing and swaps the destination address. Now, for the most part, according to Ledger's CTO, this has now been complete. All the affected Java scripts have basically been replaced, updated, and patched out with this bug that was in it. So if you are going to make any transactions, just be extremely careful. As was mentioned with how it works, it just passively swaps. So just worked in the background and made your transactions invisible to where they were actually going, unless you paid really, really close attention. When you sign a contract and send it, obviously you cannot get it back. So making sure that it's going to the correct address is really important. So just as a PSA, obviously this, for the most part, seems to be, basically worked through and all the necessary patches have gone out. But if you are going to trade in these digital assets today, go on.
Because it was so fast. If you are listening to this and it's not live, if you've not been scammed already, you're probably okay. But if you have been scammed, we're sorry.
Yeah, basically that. But having a look through the addresses which were found that were linked to the attackers' wallets, there actually wasn't many people that got harmed with this. Thank goodness.
Thank God.
I don't know if that means that all the APIs are skewed and actually no one's trading any cryptocurrency over the last 48 hours.
Yeah, you know what? This might be just the kind of like, all of a sudden the curtain's been drawn back and they realised, yeah, it was a great idea. It was a great scamming idea, but no fuckers trading.
Yeah. Oh, actually, no one uses crypto. Crap. We've made $200. We've infected every single supply chain out there and made $200. But yeah, incredible attack. Obviously well orchestrated, however, just unsuccessful and very quick thinking from a lot of smart people. I think the news of this spread extremely rapidly yesterday when it first went live. So much so I was about 15 minutes late into hearing this, and when it did get announced. And by then, pretty much a patch had been worked out and started going out to across all the supply chain. So very, very quick job there. And just another reminder, make sure you're not getting phished, via your emails, and, don't click any links that you don't recognize. And even if you feel like you do recognize them, just take a second to check it twice. So much news. I feel like we've run in for 25 minutes already, and I'm not even unpacked half of what I was going to bring. So we'll bring.
Fortunately, we do have tomorrow's show anyway, and I do have a hard stop in a couple of minutes.
So I'll just on top of we read out the market structure framework that was proposed, and the Trump family got a special call out that you can now earn CRO tokens for being active on the Trump family's Truth Social platform. So you can just message and communicate on Truth Social, and you can earn something called gems, and then you can convert these gems into CRO tokens, and you can sell those CRO tokens for dollars. So there's some news there from the Trump family. The CBOE is set to launch continuous BTC and ETH futures trading. And the US SEC's crypto task force is to host a public roundtable on financial surveillance, in the digital asset space on October 17th. There are quite a few other news stories, but I think those are the most impactful ones. And I believe we'll set everything else up for tomorrow in a nice little bubble.
Exactly that.
So we'll end it there.
I am sorry, but, it was my fault. I took up a bit too much time rambling about, they shouldn't be 24-hour markets, et cetera, et cetera. But Cam, thank you so much. Listeners, thank you so much. Shout out to everyone that listens live. Big shout out to everyone else that plays this back, which obviously, as we know, is about 99% of you. Welcome from the past. I know I say it all the time, but do follow Cam. Do follow Institutional Fi. Do follow Institutional Fi's Substack, because it's the big stories in crypto, none of the meme coin, shitcoin stuff. If you have a genuine interest in the nature of crypto and where it's being adopted, how it's pushing forward, do follow it for those reasons. Whatever you're doing today, stay tight or keep it safe, stay tight, or the other way around, whichever way you want to do. Much love, and we'll see you all tomorrow.
See you then.